Hey guys, what is up? Fez here. In this video, I'll show you how you can identify high probability market structure shifts or change of character, whatever you want to call it. So before we even know what is a high probability market structure shift, we want to know the difference between liquidity sweep and change of character or market structure shift, right? So from now on, I'm gonna refer chalk as market structure shift. Okay, so first of all, we will know how to identify the difference between a liquidity sweep and market structure shift. So let's assume that you have this scenario, right? So this right here, a lot of people would consider this as a change of character or market structure shift, right? But what if it's just a liquidity sweep? So how do you know that it's just a liquidity sweep, right? That is confusing because a lot of people, what they would do is they would trade this market structure shift. They would wait for price to come back here. And what happens? Price creates another higher high. Now, there could be an auto block or fair value gap right there, right? So price just, makes a higher high, leaving this liquidity level right here. Then price takes out this low, which is a liquidity level, and price moves up again. So how to identify liquidity sweep, right? So let's know that first. So there are a couple of ways that you can do that. First of all, you want to look at the trend, okay? So where are we going? Just zoom out a bit like that, right? And just see, where are we going? Are we going up or are we going down? So that is like step one, okay? So step one is look at the trend. Just put your eyes on that, right? You don't need to focus that much. Just see where it's going. That's all you need to do. So if the trend is bullish, right, you would consider this as a liquidity sweep and not a change of character. Okay. And how do you identify a shift in market structure? Let's know that. Okay. So let's say that you were seeing this on a 4-hour time frame. You go up to a higher time frame. For me, that would be a daily time frame, right? And look for a, let me draw this out. Okay, perfect. There you go. So when we drop to a daily time frame, right, you want to mark out like significant highs and lows. Okay, now what is a significant high and low? So this is going to be a significant low for me. However, this right here is not a significant low for me. So yeah, off of that, how do you identify a shift in market structure? There's one way to do that. Once price takes out some sort of liquidity on a higher time frame, right, and then you get a market structure shift like that I just demonstrated right now. It takes out the high on the daily time frame, and then you get a market structure shift. Then that for you is a that you can like say that it's a market structure shift and not a continuation or break of structure, because a lot of people would consider this as a break of structure. However, this is like a double liquidity sweep. Takes out this high and this high on a daily time frame, and then you have like a shift in market structure on a smaller time frame somewhere around here, right? And you would know that when price, so if a price takes out like a significant high and low like on a daily time frame, then you can say that price might reverse from here. So you start looking for shift in market structure. Now usually I would look for a sweep of this level on a daily time frame, right? And then I will look for a shift in market structure on a 4-hour time frame. Okay. So if you are an intraday trader or scalping, you could consider like your 1-hour time frame as your high time frame, and 5-minute or 15 minutes as your smaller time frame. Okay. So now that we have known how to identify the difference between a liquidity sweep and a shift in market structure, let's move on to how to identify high probability market structure shifts. Okay, that is going to be very, very informative part of the video, and you need to listen really carefully. Okay, I'm giving this information for free, okay, on YouTube. So let's assume that you have this, right? So you have a higher high, higher low, higher high. Now this higher low, before making a higher high, price filled in some fair value gap. So price went up, there was fair value gap, bullish fair value gap, price filled that fair value gap, and then did a break of structure right here. Okay, and let's assume there was some liquidity level right there. Price took out that liquidity level. So this higher low that filled fair value gap, you want to wait for price to break that structure, and that would be high probability market structure shift. Now there could be a low here, okay, and a low here. But if you want to look for high probability market structure shift, you want to wait for a structure that filled in fair value gap, bullish fair value gap, made a higher high, swept liquidity, and then you have a break of that low that filled the fair value gap. Once that structure is broken, you can look for your entry, use any entry model. It could be an auto block, fair value gap, and yeah. So this goes the same for a long position. So, you know, price makes a lower low, lower high, lower low. The lower high filled in some fair value gap, right? This right here. And then it did a break of structure. And it also swept some sort of liquidity on a higher time frame, right? So now there could be lows here, highs here as well in this region, but you want to wait for price to break the structure, the high that filled the fair value gap, bearish fair value gap. And you would, when you see this happening, okay, then that is like a high probability market structure shift. Now there's another way to look for market structure shifts that maybe you didn't know before, okay? And ICT taught this method in his 2022 mentorship. So let's assume that you have, you know, a liquidity sweep right there, okay? So now, instead of looking for price to break a, you know, a high here, what you can do is wait for price to create a fair value gap, right here. After sweeping the liquidity, without breaking any structure here, price gives a bullish reaction, and that reaction had fair value gap. Price comes back, fills in that fair value gap, and then goes back up again, breaking that structure. Okay, notice what I'm saying here. Price did a bullish reaction, and that reaction had fair value gap. Price went back, filled in this fair value gap, and then you had another break of structure, and before break of structure, price left another fair value gap. Now that is a market structure shift or change of character as well. However, I don't trade this method, but you can do. If the structure is way high and you see this occurring, you can get in the trade. On demo account, of course. I'm not a financial advisor. You know, just trade on demo. I don't know, man. Okay, so this could be considered as market structure shift as well. So you would take your entry from here and boom. So notice how we didn't break any structure here or any. We were waiting for, normally we would wait for this high to be broken. So then we could consider it as change of character. However, this method right here, price gave a reaction, there was fair value gap. Price filled in this fair value gap, and then you have a break of structure, another break of structure, right? And before break of structure, price left a fair value gap. That is your entry point. It's really, really that simple, guys. And similarly, it would be, you know, you have this, price swept some liquidity level, right? And you have this pattern right there occurring like that. So you have a break of structure like that. So price first after sweeping liquidity gave a bearish reaction, right? And that bearish reaction had fair value gap, bearish fair value gap. Price failed in this fair value gap and then did a break of structure, leaving behind another fair value gap right there. And then you would enter. Usually I would put my stop right here just to be on the safe side. But if you are, you know, want to increase your reward, you can just put it here, but be cautious, okay? And this is it, guys. This is how you identify high probability market structure shifts. I'm going to give you guys a couple of examples and then I'll end the video. All right, guys, so here is example number 1. You're going to learn a lot from these examples. So look at where are we going. We are bullish, okay? So we are going up. And if you go back here, you can see we did take out this high time frame liquidity level. So now we could be bullish until, you know, this level is taken out or this level is taken out, okay? So now what I'm waiting for is my kill zone time. So currently it's 8. I would trade after 8:30, and this is the liquidity level, right, that I'm waiting for price to take out. So let's go to the 1 minute time frame, right? So we have marked out our liquidity level, which is the higher high, higher low, and then higher high, right? Now let's play forward. Now this right here is not a change of character or market structure shift, okay? Now notice what happens here. Okay, perfect. Let me show you what happened right here. Okay, so we didn't break any structure here. However, as you can see, after sweeping the liquidity, we had a bullish reaction that created fair value gap right here. So price did filled in the fair value gap right here, right here. And then price went up again and did a break of structure, leaving behind this fair value gap right here. Okay. So now that is a chalk or market structure shift, whatever you want to call it. Okay. I don't care. So you take your entry from the fair value gap, put your stop right below there. You can put it here as well. It's really up to you. And maybe you can look to target this fair value gap right there, a remaining fair value gap. So that would be 3.18. Now look at how price failed in fair value gap. And there you have your take profit level hit in one trade, filling in this fair value gap, I believe. Yep, it did. So as you can see, price just kept on going up. So that was example for how you can basically look for market structure shifts when there is no structure. Okay, instead of waiting for a break of this low right here, high right here, you could simply look for this pattern. Okay, so let's move on to the next example. All right, guys, so here is example number 2. And for this, I will be using my 9:30 a.m. trading strategy, because I'm saying 9:30 because it's for indices, okay? So I'm going to mark out the daily low and daily high. Actually, I would just know what's happening, so I'm going to only mark out the daily low. Now that becomes a liquidity level, okay? I'm waiting for price. I'm waiting till 9:30. And at 9:31 precisely, we take out this daily low, okay? So now notice what happened here. Price filled in this fair value gap, and then we had a break of structure right here. Okay, so now the high probability market structure shift would be this high right here. So let's see what happens. Price did also create this high here, but that would be not a high probability market structure shift. Okay, I mean, we do have some fair value gap here as well. Okay, yeah, so this is a high probability market structure shift as well. Okay, so let's see what happens. Okay, so we have a beautiful break here, leaving behind this fair value gap right there. And you would go long here, put your stop maybe right there, and target maybe somewhere around, I don't know, 1 to 2 or 1 to I'm not sure. Let's go for 1 to 2. So notice how price fills in this fair value gap, and we have hit our take profit level perfectly. Price did went up ahead and took out these highs over here. That would have been a 3.22. So this is how you can actually identify high probability market structure shifts. It's really all about, guys, liquidity sweep, market structure shift, fair value gap, entry, target, the opposite side liquidity. That is all you need to become profitable. Just follow the trend, trade with the trend, and you are going to be profitable. If you did enjoy this video, make sure you hit that subscribe button and like this video right freaking now, because this took a lot of time and effort for me to make this. Yeah, I mean it. Because what happened, I recorded the entire video, but my mic was not working for some reason. So this is the second time recording this video. If you want to support me more, yeah, just subscribe. And also, if you want to learn more, you can of course join my course. We have a Discord community, which I share my trades in that Discord server. Actually, signals. Let's just stop, saying that I'm sharing my charts. They are basically signals from me. Okay. So, anyways, goodbye. Take care. Mwah. That was not necessary. I mean, you guys are my everything. Okay, this is getting emotional. Goodbye. Take care. Bye-bye.